Welcome to the Ty and Rye the Finance Guys podcast, covering weekly investment news, important financial topics, and expert interviews. We want to help you become more knowledgeable about the financial world around you. This is not an offer to sell you anything, and remember, past performance doesn't indicate future results. Now your hosts, Ty Hansen and Ryan Robertson.
Hello, and welcome. Hello, Ty Hansen.
Ryan Robertson, how are you, buddy?
Yeah, doing great. Doing great.
Good.
Recovering from
Good.
the 4th of July weekend. Hope everybody
Yeah.
had a great holiday.
Yeah,
Ate a lot
hope
of
they
food.
did too.
Saw good fireworks.
Hopefully everybody still has all 5 fingers, 10 fingers, 10 toes. Yeah.
Yeah. I got a little sunburnt, but I'm feeling all right. I haven't been outside for years, so
Yeah.
my
we
body's
got
like,
you
what
out
are
of
you,
the-
what are you doing?
Yeah, what are you doing? We got you out of your cave and you enjoyed some outside time.
Oh, yeah. Yeah.
Good job, bud. I'm proud of you. I'm very proud of you.
And good thing you didn't die. You've done some rappelling this last little bit, so
That's right.
You're
That
here
is right. My
with all
my
your
daughters.
limbs.
And some of their friends took them rappelling and they survived. And yeah, it was good. We enjoyed it. It was a good weekend. So.
Well, glad you're here, and glad anybody who's listening. We got another kind of cool topic. We're gonna continue this mini series. I call it Peak to Trough.
Yeah.
We'll see if that catches on.
The old P to T. Love it.
But it's all about this week it's all about gold. We're gonna talk about gold as an investment, and maybe a little bit of history involved.
You are
some raw
the history
numbers.
major.
Yes.
Yeah. Yes, you are.
Some real raw numbers, and then hopefully some practical knowledge relative to the gold. So last week, talked about the dot-com bubble.
Yep.
In this continuing idea of investments that kind of become trendy, how to pick them out, maybe how to avoid too many pitfalls, how to think about them.
Right.
Hopefully, because gold's kind of getting hot again, we can think about it in the most logical and or analytical way.
Right. And I think that the biggest thing that you and I are both trying to help people avoid is, when things become sensationalized, when it's a little bit more of the element of greed, right? Or too speculative to just, And you and I were talking about this before we started recording, and this idea of like, if it's a feeling of FOMO, right?
Yeah.
That fear of missing, if that's what's the forefront of your mind,
it should be your first triggering response. Yep.
Exactly.
You feel FOMO, step back. Oh,
take a step back, take a deep breath, get a drink.
And you can't breathe, and you're just like,
I gotta invest now. I gotta get this now. If I can't get this like right now, if I can't get this right this minute. Yeah, I totally agree, man.
Yep.
Take a break, go to Blanding, Utah, recoup, recover, and get after it.
Let's not make it too popular.
No, that's right. Utah sucks, everybody. Stay away.
Yeah, it does.
There's nothing worth seeing in Utah.
Nope. Okay, so we're going to start off. I'm going to give you a couple of tidbits I find interesting, and I may be the only one that finds this interesting.
You are the history buff, so I like this. I like the elements of history that you bring into these things.
Good. Gold first used as coins, at least that we know of, in Turkey, 560 BC.
Nice.
Long time ago.
Yep.
And really since then, just about every civilization has used gold as some sort of, gold and silver, as some sort of currency, which really is the whole driving force behind, European exploration in the 1500s.
Oh, yeah, absolutely.
Trying to get as much gold and silver as they could.
Really, that was kind of the first gold rush, right? Mm-hmm. I mean, coming to the Americas, that's what people wanted. Yeah, exactly. So,
and kind of made Spain a superpower for a little bit of time. And kind of like really started this whole more modern way of looking at currency and how we use currency, because gold and particularly silver, those two were sort of the modes of that. But there's a problem with that. And that problem is, how do you store it? How do you keep it safe?
Well,
how do you use it? How do you measure it? How do you weigh it? All those
right,
things are a
and
problem.
how especially like the scarcity of it too, right? That kind of gives it this interesting dynamic as well. I want to jump in for a second because what I love about that as you kind of done this research, last week we talked about .com, right? We're gonna do another speculative, peak to trough discussion about crypto. Both of those obviously were like kind of this new, more modern ideology investments, right?
Yeah.
This is interesting to see this speculation and some of these same elements of this kind of this overarching theme, right? You and I are trying to get to this whole theme of like, how do we avoid speculation, right? And
Yes.
and that's what's cool about this one. And I didn't even think about that till you put all that history data in there. Is like gold's been around a long time, right? And it just goes to show you, it's like even if something's been around for what, thousands of years and been utilized for thousands of years, that element of speculation can still kind of work its way in there. So.
Yeah. And so these very important obstacles that gold and or silver really presents, we're going to talk about gold because it kind of is the flashiest, is how do governments then, as we get into these modern times, how do they utilize this idea of gold? So basically the idea of this gold standard is saying, hey, we've got so much gold, so therefore instead of you using gold, we're going to write these dollar bills, these notes that just say it's backed up by gold. That's what you're going to use. It's easier to use and manipulate.
Exactly. If you bring us this piece of paper, you can have your gold back. Yeah, exactly.
Yeah. So banks store it. The government stored it, right? So, and I found this interesting in 1913, we basically put a standard where all notes are backed up by about 40% of gold. Because sometimes we think, it's a dollar for dollar or it's 100%.
Yeah.
No, it's never really been that. That's too hard to do. But it was 40%, and that's back in the Federal Reserve Act, which is under Wilson. And that kind of brings us now to this really much more modern idea of how we're using gold. And it just gets harder and harder to deal with because I don't, people know in the Depression and during World War II, FDR actually ordered all of the gold to become government property because we needed it to bolster the U.S. dollar because we were just spending so much during the war. And then we progress even further to where you get to 1976, where we essentially are no more part of and on the gold standard. Right. Now everything is, as we talked about with cryptocurrencies, we're in a fiat currency now.
Right.
Which is there is no gold to back it up. It's just backed up by the faith.
It's
of
exactly
the government.
how much do we believe in our government and by extension our economic system? Right. Exactly.
Yeah, and that's essentially where everybody is now. So it's interesting to bring this up because now when we come to gold as an investment, we have to start thinking about it in terms of, well, what is it then?
Right.
What is it for?
And that's what I love about this whole thing that we keep kind of coming back. We keep circling back around, and we will continue. I think we've got like 2 or 3 more podcasts. We're gonna stay with this peak to trough, right? And that's what's so interesting about this is that we've got this idea, this overarching idea of like, okay, what really is there behind what you're investing in? Do you know what I mean? And I think about it this way, like with any of it, and I've explained this a lot of times to people. It's like if I am going to borrow money from somebody versus one of my older brothers. My older brother's kind of a dork, right? And it's like what's behind the money that I'm lending? You know what I mean? Or what's the engine behind what I'm investing in? Do you know what I mean? And it's like, hey, I've got a stable job. I'm making a lot of money. My brother doesn't, right? So it's like,
there you go.
Do you know what I mean? It's like so. Why? Yeah. Anyways, back to this point you're talking about, right? What really is gold? Like, what is it? What does it really mean as an investment? So.
Yes, it's hard to pinpoint, and it's the same. We talked about cryptocurrencies a few weeks ago. It's the same problem. If we don't know its utility exactly, then it just leaves all room for speculation, which then just means there's no ceiling and there's no basement. Well, there's a basement is zero.
It's zero. You've lost everything.
That's the basement.
Yeah.
And it's that whole range, so now we don't know. So we'll get into these numbers in a sec to kind of show you this.
Yeah. Well, and again, dude, think about it. Again, I'm going to beat a dead horse here. Sorry, we killed the horse. This idea of FOMO, it's like we see something, we hear something, marketing, advertising is so good, right? And what's this other concept we keep talking about? Like, if you're seeing a Facebook ad, if you're seeing a Instagram ad,
you hear it on the nightly news.
If you hear it on the nightly news, if it's coming up in some sort of a like social media platform, and you're seeing buy gold, buy crypto, it's like that's a big warning. But so again, there's this concept. It's like if it's speculation, it's like if you don't really know what you're getting yourself into, you got to take a step back. You really do. I mean, again, I said this last time. What do you get with Nike?
Yeah.
If you buy Nike stock,
what
do you get?
Yeah, we got products. We've got a whole infrastructure for a company. We've got a whole sales and marketing,
branding.
Everything.
Yeah, I mean everything. And you know that now. Can that lose value? Maybe you buy it today, and over the next year and a half, 5 years, maybe over the next 5 years, Nike's product becomes inferior.
Right.
I mean, heck, the Nike project, Oregon project. I mean, their running team has been inundated with performance-enhancing drug scandals. But again, that doesn't really affect the stock as much. But you get my point. Like, but over time,
we know its utility.
Yes.
Yeah, we know it.
Gold, however.
Yeah, look. So let's look at these numbers. And
yeah.
Again, just think about it in terms of like with utility is what is driving these numbers. And that's a really important question.
Right.
So last time we talked about the dot-com bubble burst, right? Around 2001, 2002.
Right.
And so in January 2001, gold is $263 an ounce.
Right.
In 2001. You've got the dot-com bubble burst, then you've got the real estate market heating up, mortgage, right, derivative markets going crazy, stock market going crazy. And gold market's kind of, it's going up during that time, but the financial crisis hits.
Yep.
And it really peaks. So it goes to, in August 2011, we see gold go to $18.73 an ounce.
Wow.
So in a 10-year period, had you had the foresight, you would have seen a 600+% increase in 10 years. Crazy.
Right.
And, the financial crisis, what is driving that is people's fear of the economic or the economy.
And I think it's interesting in that time frame, right? There's two key things that happen in that time frame where we see a really big spike in gold prices, right? And it's exactly what you just talked about. It's the dot-com bubble bursting and real estate market tumbling, right? When we were talking about this too before, I kind of had this thought of, as I was kind of looking at data as we were getting ready, for this podcast, there's this inverted trend, right? When the S&P is dropping, when the market's dropping, right? We see gold pop, and it's almost like a speculation in reverse. Do you know what I mean? Like if everybody's betting on the dot-com bubble to do extremely well or real estate to do extremely well, and they're super psyched. The opposite's happening, when the markets start falling, right? When those things are crumbling, everybody's like, okay, well, where do I go now? I have to have a solution. Where do I go now? Yeah. Right? What's the next best thing? And that's where gold kind of keeps creeping back around, like, oh, let's buy gold, and you see this spike. So man, that's crazy. You're right. If you'd had the foresight and you timed it perfectly, it's a great return.
Yeah. If you timed it perfectly. So you bring this up, and this will kind of be part of the wrap-up, I think. But we do see when there's this vacuum or this void of, like, hey, the market's not doing well. Real estate's really kind of stagnant. It's almost like people need this speculation to make them feel like, I got some profits that I can make, because all this other stuff's not working, and that void gets filled almost all the time. There's almost always something
there exactly
that will fill that void.
And that's, I think, what's kind of interesting about that, as that we're talking about how, gold's been around for so long, right? Mm-hmm. It's kind of funny how that gold, silver, some of those precious commodities, precious metals keep coming back around as the declining market speculative rush. Do you know what I mean? So, yeah.
And I remember this one, back in 2010, 11 time period. There were a lot of people. You were in it too. Talking to people all the time. I want gold. Give me some gold. But that's the problem. 2010, 2011, almost 90% of that growth from 2001 has already happened. Yeah. You missed it.
Yeah. Yeah.
By the time you start to see it in the banner ads, on the nightly news, in your inbox, a text, once you start seeing that, you have already missed the boat.
Well, and I won't say which family member because they may be listening. But I had other family members. It was about. In fact, as you were starting to put some of this data together, I was like, oh my gosh, I totally remember. The family member was probably about 13 or 20, end of 2013 into 2014, middle of 2014, and then everybody's like, should I be getting on this gold thing? Like, it's like, and you're right. Like we've got some of this data where we start to see that trough, right? Yeah. That speculative sell-off, exactly. 42. Yeah. Anyways,
because following that 2011 peak, when it hits 1873 an ounce, it kind of goes down a little bit, but then there's a couple of head and shoulder spikes right after that, which is probably the time period you're talking about.
Yeah.
But then it just tumbles, and it goes all the way down to November 15th, 2015. So we're talking only 4 years, drops 42%.
Yeah.
And then it kind of just bounces around.
Right.
And then you start to see middle of 2018 into 2019. And then, of course, with the pandemic, it really spikes.
Exactly. And that's the interesting thing of, it's like, pandemic. I'm glad you brought that up because exactly. So it's like also we see this, okay, I got to get something. Like, where we
the market drops. Yeah.
Oh, crap. I need something.
We're pumping money in the market. I got to get gold because somehow gold's going to be
my
currency,
savior.
Something.
Yeah.
So it peaks. Now this is the biggest peak, August 2020, just about a year ago, $2,010 an ounce.
Yeah.
So think about these swings from 2011. You got a drop of 42%, and then you've got an increase of 86% from that drop, all in about 9 years.
Yeah.
Right? Now, I was just looking at it this morning. It's July 8th today. Gold's just above $1,800 an ounce. Right? And so it's kind of, again, dropped from that peak. What I found amazing about it is if for some reason you were getting in because you wanted to invest in 2011, right, as gold is just spiking.
Yeah, exactly.
Right, and you stayed in at that time versus having that money go into, say, the S&P.
Right.
Between that time period in 2011 to today, gold is down probably 2%. That 10-year period for gold, if you started then, is down negative 2%. The S&P, positive 250% positive. So this is the thing that I found amazing. I had someone I talked to just barely, and she was talking about wanting to do gold now. And I went through these numbers with her, and I'm like, look, generally speaking, you like to see investments that have a general upward trend over time.
Right, exactly.
Right? You want to see that they...
Right.
Over time, you consistently see that. I don't know if you can see that with gold. I don't know if over the long haul, we're just going to see gold be this performer. Maybe.
Right.
Maybe we do. But the last 10 years, that's a rough one.
Yeah, exactly.
That's a rough one.
Well, and I think this is as you're going through these time frames, these different period pieces and return data, it's so interesting to understand that, you can kind of pound your chest and hey, I got this amazing return. Gold is the answer. Yeah. Whatever. But it's again, it's the same thing with crypto today. It's yeah, if you were lucky and smart enough, and I don't even want to know smart enough or lucky, like it's just like sometimes for whatever reason people get into it, and it's like I don't. Anyways, it's you have to have timed it perfectly. Do you know what I mean? And so it's like, and you're absolutely right. By the time this idea of the masses really timing it right, if that's coming around, you've missed it.
Yeah.
Right?
You missed it.
And so that's the whole point is like, are you going to have the stomach to stay into that 42% drop? You know what I mean? Over that period of time.
That's the biggest
right?
problem. Because then you're seeing the market go up while that's dropping. Doubt it.
And exactly. So that's what I'm saying. It's like, that's what's any of these pieces with this whole mini series that we're talking about when it comes to speculation. That's the hardest thing is are you really going to stick with this thing long term? Like now again, a few of the .com companies are still Amazon, right? Is still around. So it's like, yeah, obviously we're still using it. But the point is like,
yeah,
as crazy as people got with .com back in the day, how many people stuck with it? You know what I mean? With that concept of that specific investment strategy.
Yeah.
People still own real estate today, but how many people just dropped houses? What percentage of people dropped houses in '08, right? And same thing with gold over and over and over. It's like, do you really have the stomach as a speculative investor to ride that wave? And exactly to your point, it's like, if in that 10-year period, if I'm losing money versus 250% return in the S&P 500 in that same time, like, yeah, anyways. So that's what's so hard about this, about understanding these pieces is you've got to be timing it just right for these speculative pieces to really pay off. So,
and there's a reason why that you'll see that spike and that trough in the whole thing.
Yeah.
It is because
exactly
the utility of gold is speculative.
Right.
Right. Another thing that I think is going to come into this moving forward, when you start talking about gold, whether or not it's good long term, there's a competition now coming into it with cryptocurrencies.
Right, exactly.
Because cryptocurrencies have now come into the marketplace, and it's going to compete in one of those areas that gold is supposedly good for, which is against inflation, which is against a hedge against inflation and markets like they are now.
Yeah.
Well, cryptocurrencies are thought of much in the same way, although they quite haven't got there.
Right.
But it's in that same space. So that's one thing that people have to really think hard about, which is, okay, well, where does gold fit?
Right.
What is it?
Right.
So a couple of things, too, when we look about if you are thinking about gold, if you're going to get into it and you're thinking about doing so, one of the biggest things is storing it, like actually buying gold.
Right.
That's like one of the biggest factors. Where are you going to put it?
Exactly. And that's the thing is like, okay, I mean, are you just going to go buy a gold bar and hold on to it? Do you know what I mean?
Yeah. Which
like
you can just bury it in the backyard or put it somewhere where it's secure.
Right.
If you want to, you can.
Right.
Just make sure you got to get enough treasure map to know where you
exactly.
You bury it.
Right.
If you're Ron Swanson.
Yeah, exactly. I love that.
Don't tell everybody where you buried
your gold. I like that.
Yeah.
Oh man.
But there are companies obviously that will do it they'll store it for you, but obviously you got to pay for that.
Well, and
it's got to be factored
in the retirement world, right? Which most Americans, really most of Americans' net worth or wealth, besides their home, it's in their retirement accounts, right? IRAs, right? 401ks, IRAs. Well, yeah, I mean, if you want to actually hold physical gold, that has to be accounted for through your IRA, right? The federal government's not just going to let you bury it in your backyard and never tell them what it's worth, right? Mm-hmm. They want to know what's going on with that. Really expensive and extremely difficult to deal with. Like, I mean, if you want to talk about efficiencies in the market today, this is just my opinion, right? The opinion according to Ty. But you and I have dealt with a lot of clients investing in a lot of different things over the years. The gold companies that are custodians over physical gold are the slowest, hardest to deal with, most expensive custodians out there by far. Yep. So yeah, not a lot of utility there.
Yeah,
from an
it's
standpoint.
Just tough because you got to figure out, well, what if I want to sell it? Well, it's not the easiest thing to do.
No, you literally have to have somebody saying, okay, I physically want to buy. It's just like cryptos right now, right? There's not really, I mean, there is a secondary market, but there's not this established. Now, again, does the stock market and the exchanges across the country, does that mean that those are perfect investments? No, definitely still a lot of speculation and potential for loss. The point is, though, is it's anytime you make something more difficult to sell, inherently that ups your risk no matter what.
Yeah. So the other idea of it is that just don't own the actual gold. I mean, you can own ETFs that are built around either just precious metals or just gold itself, right? Yep. Which obviously are going to be easy to buy and sell. You can look at, gold mining companies, and there are ways to follow those trends to say, hey, this may, we may be at a good point to get into some of those, either the ETF or a gold company or whatever.
IAU, the ETF IAU, right? Mm-hmm. Literally, it's 100% gold.
Yeah.
Right? Now, is it going to have the exact correlation as owning a piece of gold? No, because there's some differences, right? It's held by a company and the ETF manager, but it's like you're very, 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 very close.
Yeah, it's close enough that it's worth it, and it's inexpensive. Exactly. I mean, comparatively to just owning, it's completely inexpensive.
And not that we bet on speculation, but again, I kind of talked about how when markets are on a downward slope, gold does tend to kind of be that like shift of where people go for value, right? Even though it's speculative, and we don't try to speculate in our portfolios. But hey, look, again, in a downward trending market, gold is a defensive position, right? And so we'll use IAU in the portfolios when we need to.
Yeah, it's part of the strategy.
But again, we're not actually going out and buying gold for our clients because that would be nearly impossible to do for our clientele.
Yeah.
Picking up an ETF is way more efficient.
Mm-hmm. Yeah,
absolutely.
More. Now, it's interesting because when you think about the uses of gold, right, it's not being used as currency. Although, I don't know if you remember 10 years ago, Ty, when Utah said, hey, you can pay your property taxes with gold and silver. We'll accept that.
Yeah,
do you remember that?
That's right. I do remember that.
Now, if I'm recollecting it correctly, no one ever did that.
I was going to say, I would like to know how.
Yeah, I doubt it.
Yeah. I wonder how many people actually paid with gold.
But I think that there was this, an edict put out. Hey, if you want to pay your property taxes or utility bill.
With gold.
We'll accept gold and silver.
People are like taking pliers and popping out their gold fillings.
Shaving off a little bit.
Yeah, seriously.
Speaking of that, do you know why those ridges on coins are that way, right?
Why is that?
Because people used to shave the edges off.
Really?
To have less so they could keep more, and then they would take what they shaved off and make new coins. They put those ridges on there so they know if it hasn't been shaved or not.
That's really interesting.
And it just kind of stuck with our coins now. So
they would give somebody a quarter, but really they were technically like
smaller,
giving the weight of 24 cents, and they were keeping one. Oh, that's like, that is really interesting. That is so interesting.
And now it's just the way they do it, but back in the day, that's it. That's how they did it.
That is so crazy. It's funny. Like as we start looking at these different areas of speculation, it's like human investing is like water. Right? It's always going to find a path, and it always takes the path of least resistance, right? That's right. and it's so it's funny, like even with cryptos, like there's people making tons of money right now with crypto mining software.
Right.
That they're embedding in, like, so you've got these companies that are like creating software. Sorry, I didn't mean to get off on this random tangent, but it's funny. They're creating these random softwares that they'll, like, so a programmer says, hey, I'll do the job for you, right, for a big company. And people may be filling out online forms, right? Well, they actually have like software that's embedded in that online form. It doesn't steal your data, but what happens is every time you're using an online form, like maybe you're paying a medical bill online or you're filling information out for whatever, right, for school.
Yeah.
Every time people put in that information, it technically runs a data mine for crypto. Right? It's like, I'm like, it's exactly what you're just talking about. It's like, it's shaving the edges off of your coin to try and
get that advantage.
Let me get that competitive advantage. Humans are funny, man. We're funny.
Yeah, and it used to be, once we got off the gold standard and currency really wasn't much of a thing. Like gold really was only used in jewelry and decoration and
right.
Teeth gold teeth.
Right. Gold teeth.
But, as electronics and technology has really advanced, gold has really found a lot more use in that, because it's more stable, it's a little more durable, it's less corrosive. But the problem still exists for gold, which is that it's a very finite metal. It's still pretty rare comparatively. So the expense of it may just keep it from being used as much. So it's sort of a balancing act with it, that it's not going to become widespread for a lot of that stuff because it's just too expensive. So you can't really bring it to term, And I think that's just the ultimate point of all of this, is just understanding, driving this point home, which is the FOMO part, which is the ad part, which is understanding the speculation that goes in it. What's the utility of it? There might be a good long-term benefit for owning gold in a certain percentage of your portfolio, whether it be physical or not. We would probably recommend not, but there could be. But the fluctuations are so crazy and so big, up and down. I don't know how you make heads or tails of it at any point.
Right. Exactly.
I don't know how you project
it's like
in the future.
Right. And again, I'll make the same analogy where you look at performing companies that actually have some sort of a solid underlying value in the company, right? Like, are they doing, again, can there be giant economic things that affect the price? Obviously, what happened last year with COVID, right? Almost every market sector was affected.
Yeah.
Can that happen? Absolutely. But is there still is Nike, is Target, are these different, companies, are they still producing something, right? And yeah, exactly. You're right. With gold, it's like, wow, what's that long-term value? Do you know what I mean? Especially like you're saying, especially if crypto is being introduced, what is that? What does that mean?
Yeah.
So
it's a good competing factor. And that has to be factored into the whole thing. And, it's not like, because again, we're bringing all these things up and somewhat poking fun at them and whatnot, but there's use to it in certain degrees, and for the most part, it should be likely a small percentage of what you're doing in a portfolio from our point of view, the way we look at it. Now, we don't have a company.
Absolutely.
We don't have a company that needs to push gold as an investment. So
exactly. We're not trying to get clicks on Instagram. I mean, well, we are for other reasons, but not for gold, to sell gold.
Yeah.
We're just trying to get clicks on Instagram so people listen to us. That's all we're trying to get clicks for. That's all we want.
Yeah, that's right.
This is cool. That's what I'm saying. That's why again, when you came up with this idea of this mini series, I was like, man, this is awesome. Like, this is so cool because it's the human psyche, right? We want to find that, like dieting. We talked about that last podcast, right? We want that. What's going to fix me quickly versus, look, over time, you got it. It's just simple steps, very easy. And we'll talk about that down the road, right? What are the 5 things that we see that people do in retirement across the board that makes them successful?
Right.
You know what I mean? These speculative tools, .com bubbles, real estate bubbles, gold bubble, crypto bubble, pot bubble, right?
The bubbles,
right? Double bubble. Mm-hmm. That's not what's going to make you successful long term.
It's not.
That's not.
It's not.
Nope.
There's very few people that could actually look to that and say, like, oh, I made all my money in gold.
Yep. Exactly.
I mean, exactly. I don't know of anybody.
Well, I mean, maybe back in when was the gold rush? 1800s, late 1800s?
Hey, go back in the historical record. The people that made the most money during the gold rush in California, people selling shovels, pickaxes.
Who was it? Exact.
Restaurant owners.
Say that again. Who made the money?
Yes.
Was it all the miners?
No, it's the people selling all the things to the miners.
Exactly.
They're the ones that really made money because it was so few people really made money finding gold. But it's this, you go back to this human psychology, this FOMO. It's the desire for gain, it's the fear of loss. That's what drives people.
Yeah,
and if
absolutely.
you can instill in your brain, you are missing out. The train is leaving. You don't get on it now, you've lost.
Yeah.
People jump on that. And it's a tactic. It's a very good tactic.
It is.
Obviously works well.
Fear is a very strong sales tactic for sure.
So don't buy into it. Be more rational.
That's right.
Doesn't mean you can't do it. Just means give it some thought.
That's right.
That's all I'm saying.
For the love of all that's good and holy, just listen to Ryan.
Oh, yeah. And all the little tidbits. And
all
one
Ryan's
last
little
tidbit, Ty, for you. It is
Tidbit
believed there's been 174,000 tons of gold mined in human history. That's a lot.
174,000
tons.
That's a lot of tons.
A ton is 2,000 pounds. I actually should have found out how much more they think is there, but
I know.
Because there's not that, they're going to run out at some point. It's like diamonds. There's only so many.
I've also seen a few movies that talk about like cities made of gold.
Yeah.
So maybe we need to
we haven't found those
that
yet.
city. Let's find that great ancient Aztec city of gold.
Nope, that's what Cortez was looking for.
And maybe what movie is it where the city of gold is like all of the artifacts and they're like, treasure to them was education and knowledge. I think it was one of the National
Treasure is one of them, yeah.
National Treasure, I think it was one of those.
Uh-huh. Yeah, that was a good one. No.
Good times.
I love it, brother. I guess we've exhausted it. I think we're good.
Yep.
Good one. We really exhausted the gold discussion.
That's right. That is right. I do believe the site is up now for tyandry.com.
Oh, nice.
TY and A&D Rye, RY. Ty and Rye.
Perfect.
That's you. You are Rye. I am Ty.
Nice. Podcast
Check
will
us
be
out.
on there. Follow that. Go to YouTube, Apple, Spotify, wherever.
Lots of crazy antics.
Yeah. All right, so I appreciate
and
what?
Oh, wait, sorry. And we're coming soon too. We're gonna be doing our little bracket. We're gonna do an investment bracket.
Oh yeah.
I'm excited for this one. Stay tuned for the bracket.
Yeah.
That's gonna be a good one.
It will be fun. And loser leaves town.
Loser leaves town.
No.
You get the business. The other guy loses and has to go away in shame.
Nice.
All right, brother. Appreciate you.
Thanks. We'll see everybody next week. Thanks.
Awesome.
Hey, thanks for listening to the Ty and Rye, the Finance Guys podcast today. If you like what you heard, go ahead and hit subscribe. That way you won't miss any future episodes. Also, follow us on Instagram, Twitter, Facebook, Ty and Rye Podcast. Also, check us out at myprosperteam.com. Thanks. We will see you next week.